Federal Reserve Stock Market Crash 2021. Hey guys, welcome back to Stacking Stocks, and many thanks for joining us today. As usual, we will bring you fresh and exciting content. Are you satisfied with our information delivery? Do we ever disappoint you? Well, your satisfaction is our primary concern. Go ahead and hit the notification bell for updates on all the fresh content that we post. We promise to live up to your expectations. Now let's get down to business. What do you think we have in store for you today? Well, let's find out. In today's session, we'll give you answers to the questions of whether or not the stock market will crash in 2021. Do you think there's a looming stock market crash this year? What does the Federal Reserve predict on the stock market crash in 2021? Before we engage you on today's headlines, let's have a quick recap of our previous session. In our last session, we discussed the CoinMarketCap HODL token, Cardano to be precise. We gave you a concise description of what Cardano entails. If you missed the session, please check out the video on our wall. Let's move on to today's topic. Will the stock market crash in 2021? What does the Federal Reserve predict about the stock market crash? If you've been holding your breath while keeping tabs on the stock market this year, July 19th sure was not your day. Why are we saying so? On that particular day, the stock market took its biggest hit of the year, with the Dow Jones falling 2.1%, the S&P 500 dropping 1.6%, and the Nasdaq tumbling 1.1%. Did that affect your investment portfolio? Well, worrying about it only does more harm than good. Usually the stock market recovers quickly. For instance, the market had recovered by the end of the week when it crashed in July. We know that your major concern is whether the July crash was a reflection of what's yet to come. Will we witness another stock market crash in 2021, bigger and worse probably? Let's look at some of the key factors to comprehend where the market's going. For starters, let's understand what we mean by the phrase stock market crash. What happens when the value of stocks suddenly drops by a considerable margin? As an investor, what will you do? Ideally, you'll sell all your shares quickly. It's essential to note that the value of stocks is proportional to their prices. Thus, when the value of stocks goes down, so does the price. In a nutshell, that's what we refer to as a stock market crash. And as a result, you could lose a lot of money you invested in stocks. How do you know when the value of stocks is plummeting? What do you look at? Well, there are indexes we look at. They track how stocks are faring in the market. For instance, you've got indexes like the DJIA, or the Dow Jones Industrial Average, the Nasdaq, and the S&P 500. They all give us the overall idea of the value of stocks. When the stock market is crashing, you'll notice the visual graph of these indexes plummeting downwards like a plane crashing. Since we seek to find out if the stock market will crash in 2021, let's also look at what causes a stock market crash. There are two key players in a stock market crash: a sudden drop in stock prices and panic. How does this work? Well, here's a concise description of how it works. Stocks are small shares of a company, and investors who buy them make a profit when the value of their stocks go up. The value and the price of those stocks are based on how well investors believe the company will do. So if they think the company they're invested in is headed for hard times, they're going to sell that stock in an attempt to get out before the value drops. The reality is that panic has just a bigger role in a stock market crash as the actual economic issues that cause it. Have you at any point in your life got into a panic mode? Panic is an influential factor as far as the stock market is concerned. For instance, let's look at this practical example of how panic was evident during the coronavirus pandemic. As news of the virus spread, grocery and convenience stores all across the world sold out of toilet paper in a matter of days. Was there a toilet paper shortage? Well, yes and no. There wasn't a shortage before people started panicking. But when people lost their minds and started stocking up on toilet paper, their actions created a shortage. The same reaction applies during a stock market crash. When investors see other investors selling their stocks, they get nervous and are prompted to do the same. Once the stock values start dipping, more investors also sell their shares. Before you know it, everyone is dumping their stocks, and the market is headed for a full-fledged crash. Would you want that to happen? One thing is clear: panic fuels the stock market crash more than the economic crisis being experienced. Moreover, the stock market 100% survives based on the perception and prediction of the future. Look at it this way. There's a stock market crash, but investors keep calm and stay optimistic. What happens after that? We're confident that the stock market will recover within a short time. On the other hand, panic means that the investors have no hope of the stock market rebounding. All they can see are extreme losses. Do you now understand the concept of a stock market crash? All right, we have now critically analyzed the concept of the stock market crash. All factors considered, do you think the stock market will crash in 2021? Let's have a look at this stock market update that was issued on August 24th. It says, in economic news, just one notable report will be issued today. Specifically, this morning, we'll get a look at the new home sales figures for July. This item follows the favorable existing home sales numbers that were delivered yesterday. Investors will likely want to see continued strength in the housing market as the real estate sector plays an important role in the general economy. Later this week, the central bank will hold a virtual version of its annual Jackson Hole Economic Policy Symposium. Traders will closely watch the proceedings and analyze the remarks being offered as they look for potential shifts in monetary policy. The Federal Reserve has indicated that it plans to reduce its asset purchase program as the economy strengthens gradually. However, the timing and magnitude of any moves remains uncertain. Of note, the low interest rate environment has been a major support to the economy and the stock market. The yield on the 10-year Treasury is currently around 1.25%, which is quite low, and provides support for equities, particularly dividend-paying issues. As you can see, the Fed intends to keep buying government bonds until the economy makes substantial progress, a step intended to reassure financial markets and keep long-term borrowing rates low indefinitely. Moreover, after its latest policy meeting, the Fed also reiterated that it expects to keep its benchmark short-term interest rate near zero through at least 2023. Well, what do you think about this? The chair of the Federal Reserve, Jerome Powell, and other Fed officials expect the economy to rebound at a healthy pace next year as viral vaccines become widely distributed. Is this a hope that the stock market won't crash? As long as the Federal Reserve keeps supporting the market, the economy could soon get back to its feet. As an investor, you ought to be on the lookout for any statement by the Federal Reserve. Nonetheless, all we do is run numbers and make predictions on what we think will happen. Nobody really knows what's going to happen for the remaining bit of 2021. However, we ought to be prepared for the future. That's what makes an investor successful. On the bright side, we have a couple of reasons to be optimistic. For instance, more people are getting vaccinated for the coronavirus, and the stock market is responding positively. Businesses are gaining value in their stocks again. Biotech, e-commerce, and tech industries gained ground during the pandemic and are continuing to grow. And the Federal Reserve has vowed to keep interest rates low until at least 2023. What's stopping you as an investor from feeling confident? Anyway, we'll keep you posted in case of any changes in the stock market. Once again, many thanks for joining us today on Stacking Stocks. Don't forget to like, share, and subscribe. Also remember to hit that notification bell.